Audits. There are all kinds of audits out there. We only usually think about, when you say audit, we usually think about the IRS audit, right? The income tax audit. But if you have a business, there could be all kinds of different audits. There could be an audit of your financial statements, which is when, let's say, you apply for a bond or whatever, and your financial statements, your books get reviewed for compilation, as a compilation service, review, or audit. Those three, the only difference is the in the scope of work and the price usually. So when you have an audit like that, it's usually pay for that, right? So there are also audits from the Department of State. So in the state that you live in, there could be a sales tax audit, property tax audit. Sometimes they're called assessments, and sometimes they're reassessed. There could be payroll tax audit. There could be all kinds of different audits in the Department of Labor and so on. Usually, when we're talking about the IRS audits, those are the ones that have the most impact because the federal tax is the highest tax in the country, unless you live in Puerto Rico. But federal tax is usually the audit that most people think about, right? And when you read the news, when you read the headlines, when people go to prison or get penalized heavily, that's the audit that we typically think about. Now, how does this actually happen? When you release your tax return, so whether you use a professional to do this or you file on your own, whatever that is, when you release the tax return, the IRS's mainframe, supercomputer, if you will, analyzes all of the line items on that return. And so it analyzes certain items that have specified lines. It is especially so on like a business return, because there's special line items, and then there's something called other expenses. Other expenses are then listed separately, and you can kind of have a list and a statement for that. But there are specially reported items like rent, car and truck expenses, legal fees, and things like that. And there's a reason for it. Usually, those line items, are analyzed against a benchmark, right? Whether it's industry benchmark or locality benchmark. Does it make sense that you're making this much money living in this region? Can you actually afford to live, or do you get some income in cash? So all of these things are happening as you don't even know, because usually it happens in the background. Now, sometimes your return gets pulled for a manual review, right? So a computer flags something, your return gets pulled out of the, let's say, a mainframe file cabinet. Imagine like a pretty big file cabinet gets pulled out and reviewed manually by a revenue agent or an officer. And so when that happens, you don't even know it's happening, right? You are not aware, nobody lets you know. Sometimes when things are being reviewed and postponed and you don't get your refund really quick, chances are that something's going on in the back end. Not always, but that's pretty much the idea. And so that's where the importance of disclosures cannot be stressed enough. And the reason is that um, when that return gets pulled and there is an explanation for something, let's say a client amended the return because of the employee retention credit, for example. If there's an explanation there, then the person reviews the return, okays it, is satisfied with the explanation, puts it back into the mainframe, so to speak. And so you don't even know that you were reviewed, right? But when you get pulled for an audit, typically that happens after a manual review. That means that the revenue agent or revenue officer looks at, okay, is there something that we can probe here? Because you have to understand how they work. They also don't want to just pull you for an audit and waste time and not really find anything, right? So they have to suspect something, and there are ways to become audit proof, which I'll talk about in a minute. But that's the idea. So when your return gets already pulled, it's already a second step rather, where the first step being manual review, and then the third step being actual audits. And most of the audits are correspondence audits, meaning you receive a package with an IDR, which is the information document request. And then there is a list of the things they want to see. You print it out. Make it bulletproof in a sense that make it very easy for them to follow. Make it itemized. Item one is this. Item two is that. Just go by the IDR and respond with the support or statements. Different things are required at different audits. Sometimes, if it's a single mom, for example, what I've seen is she would need to submit a statement saying, "Oh, I get X in child support," things like that. So that's typically what that looks like. And then, once you are, you kind of can go back and forth a couple of times. I've had a situation where auto expense was disallowed for a client, and then we sent in additional evidence and it was allowed up to a certain amount. And so that was all good. So you have an ability to respond back and forth until a final determination is issued. Now, if a final determination is issued and you disagree with it, you can appeal to the IRS appeals office. Now, remember one thing. Ideally, when you get audited, you should have another professional represent you, somebody who can represent you in front of the IRS, ideally a CPA or an EA. And the reason is that you need that buffer, that information buffer between you and the revenue agent. When your representative goes in to represent you, typically they have the ability to say, "I'm going to check in with my client." Whereas you don't have that ability to say that, right? You are right there. So why don't you just respond to that? Now, it doesn't mean that you have to misrepresent something. You always want to be truthful. And honestly, revenue agents are fairly smart and they can see when you're not being forthcoming and truthful. Think of them as detectives. And they will keep probing until they get to the bottom of things. So be honest. And there are ways that you can prevent issues at an audit. Again, we'll talk a little bit more in a different video on how to make yourself audit proof. But be honest and respond honestly to their questions. Make their job easier. Make their job of closing your file easier. So, but there's nothing to be afraid of. Have somebody that will fight for you, that will ask the right questions and answer the right questions at an interview. But also, there's not much to be afraid of. If you do things right, there's not much to be afraid of. So, and how to do things right, you'll see that in the next video.